So there's so many indicators that you can use to identify good deals in the stock market. You might use the MACD, you might use the EMA, the SMA, maybe you have Bollinger Bands, you look at the candlesticks or Fibonacci retracements, and we cover all of those here on the channel. But one of the most used indicators is called the RSI, and we're going to be explaining how to use the RSI, but also, more importantly, the pros and the cons of the RSI when using the Robinhood Legend app. So I'm here on the Robinhood Legend app. As you guys can see, this is a clear setup that you can add. You have your chart, you have this watch list over here that you can kind of drag and move around. And then we got our positions over here. We have a PTIR, which is Palantir. We're up a little bit over $292 as we close down the day. $536 positive on Friday. So let's get into this indicator. If I want to open it, I'm just going to go over here to indicators and I'm going to search RSI and I will open it. Here are my settings. If you'd like to know exactly what settings to have on your RSI, you could screenshot right here. And you can also edit the color and things like that. So I'm going to open it up. This is our RSI indicator, and I can make this RSI indicator even a little bit bigger so you can really see. Now, before we get into how it works, let's and the pros and cons, just a quick look. What is the RSI indicator? Is something that you know? It's the relative strength index and is a technical indicator that measures the speed and magnitude of price movements in a security or market. It's displayed as a line graph on a scale of 0 to 100. We have the above, which is 70, which indicates overbought, and we have below, which is 30, which indicates that it's undervalued. And then 50 denotes a neutral level or balance between bullish and bearish positions. So as we can see here, this RSI is set with the same settings here as 70 and 30, and we can see that it's here on the Robinhood Legend app. So you could also have your MACD open. You might have that as well as maybe your EMA and your SMA there, but we're just going to be looking at the RSI. So I want to start with the cons first because there's some things you should probably know about the RSI that I regret not knowing sooner. Number one is that the RSI is very prone to false signals. Yes, so in strong trading markets, this RSI, it might show that it's overbought or oversold. In those conditions, what might look accurate are actually something that you might look at and it still doesn't reverse and it continues down or it continues up. So that's the first thing. You can't rely solely on one indicator, but by using multiple indicators, it can give you less margin for error. Number two is that it lags behind the price, right? So as a lagging indicator, the RSI can sometimes signal a reversal too late, and it might signal it after the significant price movement already occurred. So it's less maybe of a predictive. It can be used as predictive, but it's more of looking at history, and it lags behind the price action. Okay. So the third reason is that it's pretty ineffective when we're in low volatility markets. If we're in a really low volatility market, like take this Robinhood stock right here from September 19th until September 25th. Do you see down here on the RSI where it wasn't really going anywhere? It wasn't showing overbought or oversold. And so sometimes when it's not volatile, during those periods of low volatility, the RSI can generate kind of just less useful signals, and it just leads to some potential whipsaws, And so that's number three. Number four is it requires some contextual analysis. Like most indicators, this RSI, the overbought or oversold levels don't guarantee the reversals, and the RSI is more effective when it's used with kind of a broader market context. So you want to look at the trend direction, you want to look at support and resistance, and that kind of helps more, but it doesn't give you any of those price levels. The other thing that You have to take with a grain of salt with the RSI is that the interpretation of the RSI that you might have, might be divergence or breaking thresholds or reversals. It varies between different traders, and so some people use it on a shorter time frame, some people use it on a longer time frame, and honestly, that can just lead to inconsistent results if you're trying to use it the same as another trader. I mean, for example, when we were really bullish after the elections took place, I had changed this indicator to 50/80 because it was such a bullish environment. And if someone else saw that, they'd say, and they changed their settings to be 50/80, they might be like, what? This doesn't make sense. Like, for example, PTIR, which is the stock I'm in right now, if we kind of look at, the shorter term, look at the RSI, see how it's so high, and even when it was on the oversold side, it wasn't even on the oversold side. Yeah, like if you're looking at it that way, it's kind of hard to tell. You might want to change it to maybe 80/50 and see how that shows now. Clearer indication. Right here, it was overbought, and that kind of stayed true on the pattern. And then right here, it was overbought, and it stayed true. And down here, it was oversold, and that's after that, it did continue up. And so, those are kind of little things you can do with the RSI in different environments, kind of change the settings. But yeah, we stick with 70/30 for the most part. Okay, so those are the cons, right? It's not predictive. The RSI, it reflects the past price data, and it does not predict the future movement. So its effectiveness really kind of depends on the trader's interpretation and most definitely complementary analysis that you have from other indicators as a whole. Now, you've heard about it. You're probably saying, wow, I don't even want to use the RSI indicator. Why would I even touch that thing? It sounds like there's a lot wrong with it. Well, here are the pros, and this is why I use the RSI indicator all the time when I'm making decisions. So let's kind of get into what the pros are. The first thing is that the RSI is extremely easy to use. I mean, I can look at it and I can see that right here on October 30th on Robinhood stock at this support level right here, that I could clearly identify based on the RSI that it was very oversold. And if I would have purchased at that time, it would have been a good buy, right? So you can look at that. And it's really simple. It just values from that 30 range to 70. And that value, the 0 to 100, it very simply and straightforward shows you when it's oversold or overbought. And I think that's simplicity is something I like about the RSI. The second pro is that you can identify some momentum shifts. And it honestly, this RSI will help you spot some changes in market momentum a lot of times, which can signal potential reversals or corrections, and that's why I use it. I mean, for example, like right here when we saw Robinhood sell-off, it was showing, even though the price here was staying relatively the same, right at $23, we see the RSI was gaining momentum, which as a relative strength index, that's just kind of a clear signal that we are seeing that reversal take place. So that's number two. Number three is that this works across multiple time frames. Right now we're on the 1 hour time frame. I might go down to let's say like a 1 minute time frame on the 1 day, and I can see the RSI and how it's interacting on a very short-term basis. I mean, right here we could see down here it was showing that it was oversold. Up here was overbought on the RSI. Right now it's showing some consolidation right in the middle, might be losing momentum, or maybe it's about to continue its upward direction. When it's consolidating, that's one of the cons, right? It's hard to see. But like right here, it was showing that it had gone down. It wasn't showing oversold. But yeah, so and that's one of those moments where it continued up. It was showing that it was a sell, but it still continued up after that, right? So that does happen. Now, aside from like day trading or swing trading or long-term investing, using that RSI and seeing some of the accuracies, it helps you with divergence detection. Divergence detection is when you can see maybe on the chart it looks like it's hitting the same levels, but in reality on RSI we're seeing it lose momentum or gain momentum. And so it highlights that divergence and that reversal. Like for example, we see this stock, it hit the same price point around 31.68, except the second time that it hit that 31.68, it went even lower on the chart. Here on the RSI, it was actually showing that it was gaining momentum, right? So that could have been bullish indication. So that's something, the divergence detection is really powerful. And you might say, isn't that just a reversal? The difference between a reversal and a divergence is simply, divergence is when you have multiple indicators working together, and one indicator might indicate one thing and another indicator indicates the opposite. So in this case, or not the opposite, but different. And so this indicator, this chart was showing, oh, it's just hitting this support right here, and it's not doing anything. But then on the RSI, which is the other indicator, we're indicating that it's actually showing signs of bullish uptrend right here. And that's why some people were maybe able to catch that move. Now, the other thing about the RSI that is an awesome pro is it just simply combines well with other indicators. So it can be paired with, trend lines, moving averages, or other indicators like the MACD or the SMA. So I really like to use it alongside my MACD. It's so valuable to have it in there, because oftentimes you never want to rely solely on one indicator. You want to be able to make a good decision based on multiple indicators. So that's the other thing. So the last thing that I really like about the RSI, and the biggest pro in my opinion, is the customizable settings. Again, if we're in a really bullish time, being able to change it to be adjusted for a bullish environment is really powerful. So you can go 80, 50, and that will show you in a very bullish environment exactly when on the short term things are overbought and oversold. You can adjust for if you want something to show very, very oversold when you buy it or something like that. You can do that as well. You could also change, it goes off of the market or the price close, the open, or maybe the high. It goes off the close. You could change that. I don't do that. I keep it the same. And then of course, guys, there's the customizability of the colors. That's something on Robinhood that's really cool. We can go ahead and change everything on this app and make it look as cool as we want or as lame as we want. And that's something that I like to do. I keep it on the default though, because I think it looks great. So the other thing about the flexibility is you have kind of a 14-day period default, but you can adjust it for different assets. If you're trading, some assets react differently with the RSI, and so it kind of just forms to your strategy, and it just offers that flexibility. So that's the pro. So overall, I find the RSI to be a great indicator. I would encourage you guys to use it in your trading setup. I have found that it's very helpful. And hopefully you guys got some value out of this video as a whole. I appreciate you all. For those of you guys that would like to watch me trade live every morning at market open, we have our best deal ever with Stockmate. It's that second link down below. For those of you guys that want to watch me trade live, there is a deal right now. You can see the coupon in the second link. So again, I would encourage you to simply take a look. So hopefully I earned your thumbs up. Do consider subscribing, guys, and I'll see you in the next video. Take care.